morning, everyone. Welcome to the Stock Market Morning Prep video for Wednesday, June 10th. Well, it looks like that the markets are starting to pick up steam, and we are going to be headed in one direction or another, and in a big way. I do think that the risk is going to be to the downside. I'm going to show you why. Today, I'm going to start off with sort of like a buy the dip mentality. If we can test some key areas of support, then I'm going to be looking to buy that market. If, however, we start to break down and really break down on volume, then I'm going to be looking to sell any type of rallies in a big way. Today's really going to be the line in this sale. I would say give it this week. Wednesday, Thursday, Friday, we need to test these levels a couple times. 2080 is a big number in the S&P. We talked about this. Bonds seem to be breaking down pretty hard, and believe it or not, a lot of these currencies are up. The Japanese yen, the euro, against the dollar. So the dollar is starting to weaken a little bit. Crude oil is up big. So a lot of things happening. A lot of things happening today, and I think that that's going to provide some great opportunity in the coming days and weeks, which we've been looking for quite some time now. We've been in ranges for the last 10 weeks. Prior to that, we've been in a range again for several weeks prior to the breakout, I believe, in February. So it's been pretty quiet, and now I think things are starting to move again. Now, what I have in front of you is a TNX. This is the 10-year Treasury yield. You can see what's happening. The yield is starting to rise. This is a weekly chart, guys. This downtrend line plays an important role here. You can see that we are starting to break to the upside. If we take this out here, this 25, which is 2.5%, you divide that by 10 on the TNX, then I think there's going to be tremendous upside. I did mention several weeks back that we have a possible top in bonds, and I do think that bonds will top in 2015. I said that before. A lot of the other guys had said that. That's going to play an important role in equities as well, because eventually the money will flow into equities, but not before we get a pullback in equities. And then I think you'd buy that interim low sometime this year will probably be a low for, I would say, the next couple of years. Again, everything does change, but for now, that's what I'm seeing. So watch the TNX here, because if you look at the ZB, that's the 30-year bond. It's selling off pretty hard here. This is the weekly chart of the ZB. You could see from 166.27 down to 147.30. Now, daily chart, you could see that we had this nice bear flag. If I can draw it. Okay, it's not giving it to me today. All right. Well, if you could see the bear flag pattern here, this flag, here's the flagpole. We broke down miserably. Now here's a 200-day moving average. Any decent rallies, I'm going to look to short bonds, okay? Now that's the bonds. Now what do we look at in equities? Well, I want to show you the weekly chart just to show in comparison of where we are here. You could see on the IWM, the strongest of the 5 that we follow by far. We have held the 120 for many, many weeks. So this, to me, is a big area of support. If, obviously, we lose this, we start getting back into this sideways consolidation channel, which then, obviously, the next area of support will be the 108. That's way, way away. I don't even think that's going to happen at the moment. But we could probably test this area. You can see the Russell is very strong. I mentioned several videos ago, the Russell is usually a precursor of what's to come. So I don't think that the market will top unless the Russell has topped itself. Now, it is testing this area of resistance of 126.20. Let's see if we test and fail and start to break down. Then we might get a decent pullback. Daily chart of the Russell really not going anywhere, but not breaking down where the other indices have been breaking down, okay? You could see that here. So that's actually a very good sign for the bulls. SPDR's weekly chart, another very clean, very good chart from October 2012 lows. We've tested this many times, and we've held, and we're way away. But remember, we are way away from here, and if you look at the area here, you're looking at 205. So you're looking at 2,000 in the ES and the S&P 500. So that's still a lot of S&P points when we're trading at 2086. That's almost 86 S&P points. So that could be the pullback to here, and still be in an uptrend, if you could see. So that's probably what we're looking at, is maybe a round lot number of 2,000, and then we'll go from there. SPDR's daily, you can see we broke that trend line. Now we do have a doji here, so we could look to pop up and test this 50-day moving average, but we need to get back into this channel here. We are up in the pre-market, so any little pullbacks right now, at this moment, we will be looking to buy that dip. Okay, let's take a look at the diamonds. Weakest of the 5. Probably going to test that 200 before anything else. We are up again in the pre-market, like I said, so we'll probably look to test this, maybe get back to that 50% right up in here from this lower move. But again, weak. The equity markets are weak. Transport's our leader. Absolutely horrendous, terrible looking chart. Yes, it has to do with oil, I get it, but you could see here, it is making an adjustment from what crude oil did, and I get that as well, but if we break down any lower and we really start taking a hard fall, again, I keep telling you that these fund managers will not go unnoticed. We're way below that 200 now. We've stayed below that for quite some time. If it doesn't get back above this area, then I think the next step will be this lower trend line here. Okay, so we'll just keep an eye on that. And lastly is the Qs. Technology really got clobbered the other day, and it actually held nice little long-legged doji. Let's see if it can capitalize, take out the high. So remember, the low from these doji candles from yesterday is going to be key. Okay, 2080 in the ES is going to be key. And, of course, the high of the doji candle on all 5 indices are key. If we take that out today, then I think that we'll get a little bit of a retracement rally. Remember, we've been down 4 or 5 days, so a bounce is probably in the cards. But after this bounce, we want to see what happens here, because if this bounce does not generate any type of new move to the upside, that will probably put a lower high from this previous high of all of the indices and fail. That is what I'm looking for to see if we fail or not. If not, when we look to buy dips again and keep going higher, okay? So that is going to be the game plan for the next few days. Again, I'll recap it again tomorrow. Have a great and safe trading day. Take care, everybody.